Valuing the SpaceX IPO. For years, Elon Musk's SpaceX has dominated private market conversations, but its highly anticipated initial public offering is now threatening to rewrite the global financial playbook entirely. As the company aims for an eye-watering $2 trillion public valuation, Wall Street is forced to reckon with numbers that look more like science fiction than traditional aerospace economics. This isn't just another tech debut. It is a high-stakes gamble on the future of humanity's orbital economy and artificial intelligence combined. To understand how SpaceX reached its current astronomical asking price, one must look at its recent structural evolution. In early 2026, the company fundamentally altered its financial DNA by executing a historical private merger with xAI, the artificial intelligence firm behind the Grok chatbot. This blockbuster transaction valued xAI at $250 million and SpaceX's core aerospace assets at $1 trillion, establishing a massive baseline combined entity worth $1.25 trillion even before approaching public markets. By absorbing a bleeding AI architecture, SpaceX effectively decoupled its valuation from traditional defense and aerospace multiples. Consequently, public market underwriters are no longer just pricing rocket launches, but rather an integrated ecosystem where autonomous machine intelligence powers orbital infrastructure. At the heart of the $2 trillion IPO pitch is Starlink, the mega satellite constellation that has transformed SpaceX from a capital-intensive launch provider into a high-margin telecommunications titan. While traditional aerospace companies trade on modest revenue multiples, SpaceX is demanding a premium usually reserved for hyper-growth software-as-a-service enterprises. Skeptics point out that the company only brought in about $15 billion in revenue last year, meaning a $2 trillion valuation implies a staggering multiple that would take well over a century to justify on backward-looking metrics alone. However, bulls argue that Starlink's expanding global monopoly on satellite internet provides an incredibly sticky, recurring revenue stream that will scale exponentially as global connectivity demands soar. Furthermore, the massive capital required to build competing constellations creates an almost impenetrable moat, protecting these future cash flows from domestic and international rivals alike. Beyond current telecommunications revenue, the IPO valuation aggressively prices in the unproven but revolutionary capabilities of the Starship launch platform. Starship represents a paradigm shift because its full reusability is designed to drop the cost per kilogram to orbit by orders of magnitude. Institutional investors are betting that this cost reduction will unilaterally unlock the broader space economy, which analysts project will eclipse $1 trillion in the coming decade. From orbital data centers to asteroid mining and point-to-point terrestrial travel, the valuation assumes SpaceX will act as the ultimate toll booth for all future off-world commerce. Therefore, buying into the IPO at this level requires an investor to price in entirely new industries that do not currently exist on Earth. The sheer size of the targeted $75 billion capital raise introduces unprecedented structural dynamics into the public market mechanics. Because SpaceX is seeking a multi-trillion-dollar capitalization, its eventual inclusion in major indexes like the NASDAQ 100 will trigger massive automated buying from passive exchange-traded funds. Hundreds of billions of dollars tied to these passive indices will be legally forced to reallocate capital into SpaceX shares almost immediately upon listing. While this massive institutional demand guarantees a highly liquid debut, it also introduces substantial systemic volatility risks for everyday index fund investors. Ultimately, the valuation is being sustained not just by fundamental cash flows, but by the undeniable mathematical reality that public markets will have no choice but to absorb the equity. The SpaceX IPO stands as a definitive turning point when speculative tech valuation meets the boundless frontier of the space economy. Whether the company can truly justify its breathtaking $2 trillion price tag depends entirely on execution across both satellite internet and deep space logistics. In the end, public investors aren't just buying shares in a rocket company. They are funding Elon Musk's ultimate blueprint for a multiplanetary future. Thank you.